In this video, I'm going to show you how you can trade a $100 account. This simple system, the one I always use, I use it to catch spikes. And you can also use it if you want to trade ticks. For instance, as you can see, this is crash 600 and it moved well from this node to this node, then pulled back to this node, then later went upwards. So if you want to analyze the market using this simple system, you have to know the meanings and how it gives signals. As you can see here, we have this line. When it turns green, it means the market is now what? Is now buying. We also have these blue lines. Okay, these blue lines are there to show you that the market can make a reversal going downwards. Then we have these red lines. These are lines that will show you that the market will make a reversal going upwards. That's why you are seeing here that it pulled back to this point, then went upwards. All right. So in this video, I'll be showing you how you trade a $100 account. But first and foremost, we're going to do the analysis together using this simple system. To those who are new to my channel, please click the subscribe button and like the video. If you want to join our Telegram channel, just click the link that is in the description. It will direct you to our Telegram channel. And if you want to chat with me, you can just use the number that is in the description and you send a message on Telegram. All right. So we want to analyze the pace together today so that we see whether we can get an entry or not. As for me, I prefer catching spikes. I prefer trading spikes always, guys, because spikes are less risky as compared to ticks. When you want to trade ticks, make sure that you're going to have a sniper entry, because if you enter here, let's say you want to trade ticks, then you enter here, it moves like this, then it spikes like this. If your account is small, you're most likely to blow. But look what happened later. That was a massive movement, okay? So as for me, I always tell people to start analyzing on the daily time frame so that they can get the hint of how the market is moving. So we're going to check the daily time frame. This is the daily time frame, guys, as you can see. So here on the daily time frame, you can see that this is the current candle. Right, the current candle is green, and as you can see, the market was dropping overall. But this candlestick is now above the body of this small candlestick. So in a nutshell, we're not saying the market is promising an upward movement, but it hasn't confirmed that movement, because usually the market will make such an impulsive move like this, but it should pull back to where it started to make the impulsive move first, so that it can make the real impulsive move going upwards. So in a nutshell, we can say the market can drop anytime because it hasn't confirmed that it is going to go up forever. So what you need to know is when it is about to reach where the previous candlestick started here, right, you should know that it can pull back. Just note that it can pull back, because this was the previous high, because here the market was dropping, then it pulled back to this point, then it started to open this candlestick and went upwards, right? But it later dropped, then moved upwards again, then went downwards and moved upwards again. So what you have to know is you have to respect each and every order block that you see on H1. All right, so we're going to check crash 300. Respect each and every order block that you see on H1, guys. So what do we have here? You can see that crash 300 is another pair that is very easy to trade. As you can see, it's moving well, guys. It's very easy to trade crash 300. So we can check on our daily time frame. Before you do anything, check on your daily time frame. After that, you move to the hourly time frame. So here on the daily time frame, we can see that the current candlestick is red, and it's promising us more more spikes. So we can go to our H1 and see whether we can still enter it. Our H1 looks good, guys. As you can see, we have a sell entry here. So in a nutshell, we are saying the market can drop to this red line. Obviously, it will pull back for a while, but it will drop to this red line. So when you see this kind of a setup, what you do is you wait for it to create a consolidation. So we are going to check on a smaller time frame. Here, it should create a consolidation area. So here, for instance, it should create something like this, whereby it will be spiking, going up, spikes, going up, spikes, something like that, then something like this again. That will show you that the market can drop around that area. So we have to wait for it to create such kind of a setup before we do anything. So we are now moving on to Crash 900. So this is our Crash 900, guys. First and foremost, you check your daily time frame for you to see the overall trend of the market. So here we can see previous candlestick. This is a bullish candlestick, right? But if you can see clearly, it's not giving us a sell or a buy because this candlestick is not yet engulfed the previous one. So we can't say the market will buy or sell. So we avoid this kind of setups. We only trade this one, whereby we have a bullish candlestick, but we can see that this one just engulfed the previous one. So we can say it will drop again, and this drop was very huge. This is the daily time frame, guys. So you don't have to doubt it. So we now check on H1 to see whether we can get opportunities to scalp. Here, this is our H1. Our H1 is not that good. As you can see, we also have bullish candlesticks here, so the market can just move to any direction. So we avoid this kind of trades. We only want obvious trades. So I am now opening a Boom 1000. Boom 1000, according to M5, it's looking like this. So we have to check on a daily time frame before we do anything. This is our daily time frame, guys, and our daily time frame is promising us that the market is moving, because if you check clearly according to this chart, these are the bullish candlesticks, and as you can see, this one managed to close above the board of this one. So we can say it has created another one. So there is a higher probability that the market is going to go up, and as you can see, it's also a buy signal here. So we can check on our H1 so that we can see whether we can still enter this pair. So I'm not checking my H1, but H1 is showing us something which is not really good, because here you can see that we got our buy entry here, but the current candles are not closing well, because check, this was the bullish candlestick, bearish, another bullish candlestick, okay, but the bullish candlestick did not manage to close above this board. It just closed below, then it created another doji candlestick which did not manage to close this candlestick again. Then now it has created another doji candlestick. So for us to know that the market is now buying, it has to cross this small body so that we can try to buy, but it's risky to enter around that area because we can see that it has reached this blue line, and whenever it reaches that blue line, there is a higher chance for the market to make a reversal going downwards. So you should take note of that. This is why I always say trade using this simple system, because as you can see now, you'll be able to see that it has reached this blue line, the area with a lot of resistance. So the chances for you to get spikes might be very low, but it should go up, but it can retrace because of this resistance. So we're going to check another pair, Boom 500. Boom 500, what is happening on Boom 500? First and foremost, we check on our daily time frame. Here, this is where we see the overall trend of the market. So here we can see our bullish candlesticks. These are our bullish candlesticks. But now, this bullish candlestick did not manage to engulf this one. So in a nutshell, we are saying the market for it to buy, it's very low. It has to pull back to where this candlestick started. So we are now opening our M1 so so that we can see where we can place our entry. Our entry can be placed around this zone, and you should have a tight stop loss, because if it breaks out, it means the market will not move going up. So you can see that here we have this red line. So it's either the market is going to spike here. If it doesn't spike, it will spike on this node. So what you do is, when it reaches this red line, you just enter. Then your stop loss should be 5 candles on M1. When I say 5 candles on M1, I'm talking about these small candles: 1, 2, 3, 4, and 5, something like that. That is how you count those small candlesticks, guys. Let me try to zoom in. 1, 2, 3, 4, 5. These are the candlesticks that I'm trying to show you. So basically, that is how you use the simple system. So let's say you've entered here. You now have to respect these lines. When it reaches this line, you have to know that it will make a reversal. So you will take your profit. Then after taking your profits, what you do next is you wait for it to pull back to the red line where the market will be consolidating. Then you strike again so that you can catch more spikes. So that is how you trade using this simple system. So here, I think you can see we have a very good setup here. Can you see that? We have a very good setup here. And as you can see, the market was ranging around this blue line again. That's why it later gave us massive spikes. So basically, that is how the simple system works. So I'm going to look for trades, and I'll let you know when I get a trade, so that I can show you how to trade a $100 account. Okay, guys, as you can see, this is Crash 500, and now it has reached this node, as you can see. So I want to check H1 first. This is the hourly time frame. Right. So on our hourly time frame, we can see that our latest signal was a sale. A sale was given way back. Right. So here we also have a sale signal. So we are going to try to catch the spike. Okay. So we are going to try to catch the spike. I'm now going back to M1 so that we can place our trade, guys. Okay, so here, this is where we are going to place our trade on M1. So usually it is going to spike on this blue line. So I'm going to enter my trade now. I'm going to place my 0.2. So we're going to try 0.5. Let's try one lot size. Right. So I've entered using one lot size. As you can see, this is a $90 account. As you can see, the equity is now on 90.96. We managed to catch this spike, as you can see. So if you want to know where it's going to go, you now have to follow the node. As you can see, we have a node written number 5. So the market should drop to this node, but I think it will drop more until it reaches this red line. So we have to hold the trade, guys, until it reaches that line. This is the line I'm talking about. So guys, if you want to know more about this simple system, or you want to trade with me, just click the link that is in the description. It will direct you to my Telegram channel.